And don't even get me started on the main story of today, which is gold. Gold is doing crazy stuff. We got a lot of stuff. I know there's already 15 questions in the chat. I know, guys. Don't worry. We will get to gold here. We're gonna discuss the latest, what we know here about kind of the geopolitics that have taken place in the last 24 hours. The Iranian president was taken down, I guess, or the helicopter that he was in collapsed or fell down, and he I believe the news is that him and there was one other important figure. Does somebody know who else was in the helicopter? There was one of his ministers. Anyways, the president passed away, and now, during that event, there was tons of questions as to what's going on. And just remember that gold doesn't even need hard news in order to rally on fear. It just needs the rumor. And so there were plenty of rumors surfacing last night. I watched gold on the Sunday Open just continue to explode higher. And, there were concerns as to whether or not it was, foul play, if this was some sort of an attack, or if this was just, a unfortunate coincidence. I believe that it took place near Azerbaijan, which is, to my knowledge, and my knowledge is limited, not an incredibly friendly country to Iran. So please correct me if I'm wrong in the chat. Again, I do not claim to be an expert, but trying to report at least what I know and what I've heard. So again, that situation causes questions, causes concerns. And with questions and concerns, we saw gold spike. Now this morning, a pullback, a big drop in the price of gold has taken place so far. The foreign minister, yes, that's correct. Yep. So yeah, lots of uncertainty over in that region. And does this really cause gold to start to trend much higher? This news alone, I don't know. I don't necessarily think that I believe that Israel did not claim any partition in this. I'm not sure that they would, even if they did. I have no idea. But my point is this. For now, there's a big question mark in the Middle East. I don't know that equates to violence or any sort of escalation. I have no idea. But regarding all of that, no idea and question mark, that's why gold is up. Remember, gold doesn't have to have hard news. It just needs to be concerned. There needs to be, some questions in the air, and that will be enough for gold to rally. Gold, many people forget the history of gold. If you've looked at a price action chart of gold, here's the thing. Gold can triple. Gold can quadruple. In fact, I believe I'm forgetting the dates, but there's been times where gold has 7x'd in like a decade. So let's take an example here, just really quick. Let's say 2008, right? 2008, around this time through 2011 with the big run up, gold went up 125%. And if we take a look, like here's 2004, I mean, it went up 100% here. So just remember that gold can, actually, here's a good example. Let's go 1999 through like 2010. I mean, you can see that's like a 200% run up. So gold can do these crazy moves, and it can last a lot longer than people think.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edgefinder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
So when we see these moves through the highs, a lot of times people are like, oh my gosh, sell the all-time highs. People love to, when something is ripping higher, they love to try and find the top. They like to short it. They like to sell against it. But please understand that this gold market right now, the path of least resistance is up, in my opinion, because the trend is up. there's no question that when something is hitting all-time highs, the trend is up, right? I don't know anybody who would dispute that if something is breaking all-time highs, that the trend is up. So when I look at the 4-hour chart, and yes, you get these violent pullbacks, but again, I've said this so many times, so I sound like a broken record to my, my regular friends that watch the streams. When something hits all-time highs, usually it is a bullish thing. Something has really triggered, something has gone on to get it there. But not only that, people will freak out. They'll say, oh my gosh, look at that big sell candle. But look at all the green candles before it, right? We have this tendency to look for the reversal. I don't know what it is about us as humans, but traders love to try and find reversals in charts. This is not, in my opinion, a proven reversal whatsoever. Yes, it is a short-term, hey, you might be seeing a pullback. Hey, we might even pull back to 2,400. But for me, this is totally intact, totally in an uptrend. Even if you see another big red candle come in like this, I'm not fazed by this. I'm still bullish. Unless, from a price action standpoint, what would get me out of this trade is I've now moved my stop loss just below this market structure. I'd like to see 2,400 hold. That would be my limit to where I'll stay in the trade. If it breaks 2,400, I'm taking profits. But also, I know that there's going to be a lot of people who are saying, should I short this right now? Should I go long? Going to here, but if you missed the move, I think you missed the move. Yes, there may be an opportunity to potentially add here. This would be the only spot, but for me, I don't have any plans to add more to this trade. This trade has taken up a huge chunk of my portfolio. I talked about that on Friday. This is nearly half of my portfolio right now, which is a lot. But all trades that I'm in are in profit, so I can't lose money on gold anymore. And that's where I want to stay. I really don't want to add much more to this trade. Yep, we bring the cash register on this one. It is going to be a winning trade no matter what. The thing, however, is I just have to be patient now. Is there a part of me that's like, maybe I should just kind of close out now because it might come down and hit my stop loss? Yes, but I've done this for a long time. And I've learned that the second that I think it's overdone, it's just getting going. I don't try to predict the tops of uptrends or the bottoms of downtrends. I really find that over the years, that has been a net negative to my trading performance when I try and do that sort of thing. So that's why I personally, and this is how I like to trade, I like to, obviously what got me into this trade is fundamentals plus simple price action. But what keeps me in the trades that run like crazy is a trailing stop using market structure and letting the market tell me when it's time to get out of this trade. I am not fazed by this pullback. I'm not worried by this pullback. I'm in profit. I've done my homework. I'm in the trade. And obviously, it's a really easy spot to be in, to be floating in profits and not to have anything to worry about. But again, that's where I make the most of my money. Most of the money that I make in trading is environments like this, where I'm just saying, I'm chill. Whatever it wants to do it. I don't care. If this thing breaks lower, I will make, May will be a great month for me this year. If this market rips and continues, which do not think for a second that it could not do that. It could totally take out those highs and keep ripping to 2,500. I'd love it. Obviously, I'd love it because I'm long, but I wouldn't be surprised if it happens. So at this point, I am letting the trade play out. Why am I bullish gold? Well, I've talked about this a lot, but gold is getting a bullish reading on the Edge Finder. This is what got me into the trade. The commitment of traders data showed institutional money was long. Seasonally, it's a good time of year to stay long gold. According to the last 10-year average, the trend is to the upside. Economic data, PMI data, GDP numbers, retail sales, inflation statistics, employment data. These are all screaming bullish biases on gold. And this is, again, with the Edge Finder, the purpose is to automate the analysis of fundamental analysis to some degree, right? So all of these figures aligned, and that's what got us this really strong reading, and it has ended up being one of my better trades this year. I think it's like my third or second best trade so far this year. We'll see where it goes. If it closes out at stop loss, I think it's like my third or fourth best trade. But if it breaks through the highs, it could be number one. So we'll see.
It's just a lot of green, just how I like them.
Yeah, James, can we get a perfect candle in Frank's absence today?
Perfect candle. That green candle. Right
That's what we need right now. We need a perfect candle to the upside. Just give us one of these. Maybe if I draw it on the chart, it will come true. So if we want it to, this is, let's try that theory. This is the next candle that we want to see. We just want to see one of these. All right, straight to 2,800.
I've been drinking.
Yeah, no, but again, just I think staying like agnostic with your positions is so much easier said than done. But I find that the winners for me are like the easiest ones to hold on to. So anyways, S&P 500 also near all-time highs. The Nasdaq's up pretty good, 0.35% today. And remember, this week is really big because you have NVIDIA earnings. All right, so let's also take a quick look while we're on the Edge Finder at the commitment of traders data for this week. So COT data is live. Let's take a look. We got our latest update. Gold still very bullish. So I like to see that. Silver bullish, Dow bullish, the Nikkei bullish, Swiss franc, yen, CAD, Aussie, and the 10-year treasuries all bearish. Now, this is from a net overall futures contracts traded positioning. But then if we take a look at the weekly filing, this will show us, this chart here is my favorite on the COT data, because what it does is it shows us the week-to-week filing, shows us like as of the latest week, what did they buy or sell or make moves in? So if we take a look at the Nikkei, for example, the Nikkei had a significant buy order, which I thought was really interesting. So you can see they really closed a lot of shorts on the Nikkei. The Dow Jones, they also closed shorts and added longs. So getting a nice little net change there. Platinum, they saw, some buying there. 10-year bonds, 10-year treasuries, what we can see here, they closed a substantial number of shorts and they added longs. So very interesting there. And the Russell, some buying there as well. Added some shorts, but added significantly more longs. When you heard from Jerome Powell last week, he was more like, mixed on PPI. So, you're seeing a little bit, that was this morning, right? Was it Barkin that was speaking? No, Waller was speaking this morning. So, so I guess the question is, and this is sometimes worth mentioning, is that the FOMC is a committee of people that have differing opinions. Not everyone perfectly agrees with what the inflation story is. So you mentioned he was thinking that the April number actually was kind of a miss, that it was actually disappointing.
Barr, not Barkin.
Barr
said that Q1 inflation was disappointing and did not provide confidence to his policy.
Got it. Yeah, so I guess where does that take us with the dollar index this week? What would you be looking for in order to kind of be convinced of dollar strength again?
New high, so crossing 105.
105, yeah, that makes sense, because this level, again, really key spot here. We broke underneath that. The question is, can we get above that to continue higher? So what about this, Ivan? What about the other currencies? What about, if you're looking at like the euro dollar, could perhaps some of the dollar strength come back due to other currencies seeing some more weakness? Is that a possibility too?
That's the direct translation. And I got a question also today in the very important VIP meeting this morning. What would lead to a euro dollar sell? We have a prospected priced in at this point, or will be priced in, a rate cut in June, 6th of June from ECB. That could be a driver. Secondly, dollar strength would be great in that situation, and a new low would also be important before considering anything. But yeah, I think that euro dollar in the dollar strength kind of scenario is a very good candidate, though it's not going back up again. So boo-hoo for that new lower low.
Yeah, and I think something else to mention is that another, if you look at like the DAX, right? Like German 30, yeah. So if you look at like German 30, the DAX is actually flying super high, and it's arguably because the expectations for a rate cut in Europe are actually significantly more convincing than even in the US. So when we look at, the performance of the stock markets over there, they're flying high on that idea of rate cuts. Yeah, I mean that could be a candidate, is if now that the Fed has seen some evidence, not a ton. This is just one singular print that we saw with the CPI last week in the right direction. It may give the ECB the green light to go ahead and make their move towards rate cuts. We've heard in lots of conversations between monetary policy, leaders both in the U.S. and abroad, that the Fed is something that, of course, the other ones look at, and vice versa. The Fed is looking at what the ECB is doing. The ECB is looking at the Fed. And so, now that maybe we've started to see some good news in terms of the inflation story, and maybe rate cuts are still on the, kind of on the menu this year for the dollar, maybe that gives the ECB the go ahead to rate cut. And so if you see more progress on that side, yeah, that could cause the euro to have a little bit of a retracement. See, that's where I think that the euro has had this nice little short-term push up, but I'm not incredibly convinced of euro strength, simply because if you look at the economies, comparatively speaking, the European one is worse off. Is that right?
Yeah. And in that sentence, I don't want to dig around too much, but we are set up for a ECB cut. We're set up maybe for a Bank of England cut, and we're set up for a Bank of Canada cut coming in June. So those are kind of like, that's the ones to look out for. That doesn't mean that those currencies are not going to fall through the cracks and everything is going to fall off the chart. There are still going to be normal market moves in that time period, but you might see an elevated bearishness when they do go bearish, because then everyone priced that in at the same time. But you can go higher to get a better price before falling. That's totally possible.
Yeah, that's a good point there. I mean, it might have a little bit of a short-term squeeze higher, just because for a while there, the euro trade to the downside was kind of the popular trade, but now we're seeing a little bit of mixed sentiment, and maybe it is, again, just kind of retracing before a bigger move lower. I would generally say that I think that on a longer term basis, I prefer the dollar over the euro, but in the short term, the euro looks, it's just taking back some ground. What about the pound? The pound, Bank of England status, are we going to see the pound stay strong relative to the dollar much longer, or is this same course of action as the euro to you? What do you think?
I have one. I don't know. There is something that I need to really understand here. We have 3.2 inflation. Inflation is lower in England. England is supposed to rate cut, and that is supposed to make it weaker. But there is something in the money flow that I haven't explained. And if I'm doing for 10 years, I should have figured it out now. But there's something in the pound strength. It's always strong against dollar. Even dollar is strong. It's always strong. And I haven't really found out, other than during Brexit era. So when the UK economy is like it's okay, like everything is not too crazy, it is kind of strong. So that's the one that I'm always going to be shorting dollar against the pound, and almost never buying the pound against dollar. Buying dollar against the pound, because it's almost never weak.
Yeah, and I think, when you compare the European economy to the UK one, it is a little bit of an easier trade, I think, to, generally speaking, be more favorable to the pound over the euro. So, that's something to look at. And as you mentioned, inflation in terms of the UK for the longest time was actually higher than the US. Guys, the dark green is GBP or UK inflation, and the blue is US inflation. You can see, actually, to Ivan's point, just recently, the UK inflation actually has come under, the first time in many, many months, the US inflation rate. So to see that continue is an interesting story. I think that, to me, I don't have the same, I guess, unwillingness to be short the pound over the dollar. I think that this could be an interesting trade. I mean, the pound USD at some point, if dollar strength does come back into the picture, might be a candidate for me. But to your point, though, Ivan, I still prefer the euro over the pound. If I was going to short something against the dollar, it'd be the euro. I just think it's a little bit easier one to pick on, to be honest.
But you know very well, Nick, that you're gonna get the strongest one. Also, for me, the pound, I was just looking. Pound is the strongest today. I don't know why. I can't tell you. I can't help you, but it is. But my point of it, my reasoning, if I'm going to say so, is there is weaker ones. There is Australia, it is New Zealand, mostly always much also the opposite of dollar. If dollar is strong, they're always weak. And as well today, New Zealand is one of the weaker ones, with weakest. So in my mind, this is kind of what I generally see in the market. Pound being the strongest, New Zealand being the weakest, yen being weak, and today Euro being somewhere in between. But it's just what do you call it? A choice, maybe.
Yeah.
Or sorry, just something I've experienced a lot of times when I'm trying to sell pound. It just doesn't give the same.
Well, and that's the thing too, Ivan. You mentioned, you have the Australian dollar there, you have the pound, you have so many different options. I would actually say, if you get a real risk off market, the Australian dollar and the Kiwi dollar would probably be your best candidates to be long dollar against something else, simply because, again, they're commodity-based economies. They're very dependent on global growth, and if they're not seeing global growth, I mean, everything struggles in a declining growth environment. But especially countries that are, growth countries, things that are kind of more emerging, if you will. And so if you do get a real risk off move, I would agree with you on the Kiwi dollar, the Australian dollar, as you might also see the carry trade unwind become a pretty strong trade on that side. And so you have options. And, the other one for that same scenario would be dollar yen reversing, could be a violent, trade. I know Chris Pulver, who's up next on the show, he talks about this one pretty often, or we've talked about this together as well. The carry trade unwind would be violent on some of these pairs. I think that, just for general, if the economies aren't going to crash out of the world, I think U.S. outperformance against the euro is a trade I like the most too.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.